All right. Good morning, Thomas and Laura. How are you?
Good morning. I'm doing well. How are you?
I'm good.
I was looking for you. I heard you, Kelsey, and I'm like, where are you on the screen here?
I did the same.
Thank you both so much for being with us today. Everyone, this is Thomas and Laura. They're from Libro Credit Union, and they're here to talk to us a little bit about what they do and how they can support entrepreneurship. Normally, you would have Thomas and Laura for a little longer, and we'd go through a whole session together, but COVID's super fun for everyone. And instead, they're going to tell us a little bit about how Libro can support entrepreneurs for about half an hour, and then give you some contact information for how you can get in touch with them if you're interested in taking them up on any of the offers that they make available. Laura and Thomas, we have you until 10:30. Unfortunately, we do another speaker right after you, but the floor is yours if you'd like to ask them any questions or open the floor for questions, or if you have a PowerPoint presentation, you are able to share your screen. So the floor is yours. Thank you so much for being here.
Thank you, Kelsey. My name's Laura Wimpers, and this is Thomas Sumter with me as well. We're both from Libro Credit Union. We're both commercial and agriculture lenders, so basically business lending or farm lending. We help everything from startups to people looking to buy a large business for their organization and everything in between. So we're happy to be invited back by Leap just to chat with you today. So we do have a PowerPoint presentation to go through. Usually we go through it in about an hour, so we're going to cut it down and cut some stuff out. But we will share the presentation with you after as well, just so that you do have all of the slides available for your viewing. And if you have any questions as well, feel free to reach out to Thomas or myself. Unfortunately, just with some prior commitments that came up this afternoon, we won't be available for the office hours, but we will still provide our email addresses as well, so you can reach out to us later on and we'll get back to you as soon as we can. So yeah, we'll get into it here. Just, Kelsey, you're able to see the screen there?
Yes, but you're not on
Okay.
presenter mode.
Oh, there we go. Nope, wrong screen. Hold up here. Got the dual monitors going and it's working on one and not the other. Let me see if it'll do it from this now.
Yeah, we see your presenter screen. It's fine how it is, Laura. We can see it.
Okay, yeah.
You can also see your notes.
Try one here. I'm just going to stop sharing and go back on the other one.
Sure.
But while I do that, just a little bit of background about Libro. So we are a credit union based out of Southwestern Ontario. So we've been around for a number of years, helping small businesses right in this area. Just gonna do some stuff here. Tom, do you want to just chat a little bit about the background while I get this up?
Yeah, definitely. So for everybody who wants to know or doesn't know what a credit union is, and especially Libro, we have 33 branches in Southwestern Ontario, and our focus is really on growing prosperity in Southwestern Ontario. If I was to describe us in two simple words, it'd be say that we're all about relationships and community. So whenever you do see us, those are the two parallels that we really try and drive here. And we have about 600 employees and probably over 1,500 businesses and 200,000 owners. I think it's over 300 actually, probably now. But yeah, so we are still a full service financial institution doing all the same things that every other FI would do. We just have that community focus and moving forward. I don't want to get ahead of the slides here. That's why I'm trying to limit what I'm saying.
There we go. Does it look good, Tom? Okay. Sorry about that there.
I don't know if you're presenting. I don't see it, Laura.
Oh, no. Okay. Well, we're just going to have to go back and share that one initial screen, and you'll have some extra notes on there, unfortunately.
That's fine. That's good. But this is the beautiful part of IT and all going online. It's great. So once you master this, it's you'll never have to do it again, right?
We always think that, but then it keeps happening.
Yeah, it never works.
Something happens.
There's always something.
Just blame it on Zoom. We use Teams, so we'll just blame it on Zoom.
There you go. It looks great. Perfect.
Yeah, so hopefully you can see it. We'll share it again afterwards too, so you can see the whole thing. Thanks for the thumbs up there, Jesse. So yeah, just a little bit about commercial services. So Libro, like other financial institutions, does offer a full range of financial services for business accounts as well as personal. So different things like your business operating accounts, some lines of credit to help you when you have cash flow shortages and whatnot, payroll services to pay your employees, Other things like merchant services, so that's your debit or credit side of things. And then as the business grows and has equity and whatnot in it, sometimes you're looking to invest some of that as well. So we offer kind of the GICs, the mutual funds, and that side of the relationship too. If you are under 25 years old, Libro does have a full Go Free account. So it's a free unlimited checking account. So just wanted to share that as well, but I won't go too much into it. So let Thomas just get into some of the facts just on small businesses themselves.
Definitely. So for me, the key takeaways, everybody on this page are first as what we define the small business workforce as, and we're looking at 100 people or less in small business. And when you think about that, it's pretty interesting to see that that first statistic there, 50% of Canada's GDP is really attributed to small business. Must put into light, with that range of employees, the quantity of small businesses in Canada, and that's really what drives a lot of the economic impact. The last point there is really only 51% of new firms survive their 5th year of operations. And there's a magnitude of reasons, what I'll pick up on the other side, but it really goes down to a number of different issues, economic, socioeconomic, and everything that you guys are going through as well. So just some nice facts there. Number 6, Laura. Perfect. So reasons for your business not succeeding. So just like that last slide with 51%, not surviving past the 5th year, here are a couple great reasons of why, something might occur to your business. So starting your business for the wrong reasons, right? I think this really values passion. If you don't have passion aligned in your business, you're probably not going to find that kind of direct relationship to it and find that grit and determination to continue when you do have those lows. Lack of experience, not enough money, capital injections right off the beginning, or trying to rely on financing right off the bat can be some of those downfalls. Location, as we've noticed, are very, very important moving forward. But again, as we move more onto an online platform, it's still important to, make sure that you have some sort of physical or easy accessible online platform, right? Location can be online as well. Lack of a sound business plan, I think, really goes down to the fact that if you've never done one for your business, I think it's a good learning tool in just kind of breaking out where you are now, what other competitive disadvantages you have, what your differentiation factors are today and moving forward. So if you don't have one, it's always a good practice to move forward and make one today. And just expanding too fast is the last one, right? As entrepreneurs, I'd say, pie in the sky, you guys are, always wanted to do above and beyond and move forward. I would just try and hone that down and really get some focus onto what you're doing today.
So now we're going to get into a little bit about the process of getting a loan. I did kind of read through each of your businesses, and it looks like most of you are kind of at the stage where you would be just before even looking at getting a loan. You're just kind of starting stuff up, which is great. So we're going to kind of chat about what getting a loan actually looks like through a traditional financial institution, and some of those documentation or documents that we would require to make that happen. Just as a forewarning, it is very, very difficult to get a loan through a traditional financial institution as an entrepreneur. The reason being is just that you don't have that established track record yet. So it is very hard, not to say that it's impossible, but you will really have to focus on your own resources up front, or getting capital from other places versus a traditional financial institution. So some of the lending products that we do offer, so just kind of your overdraft protection, kind of standard is what you would get as a personal overdraft on an account, just to kind of be there in case there's, let's say, a check clearing and your receivables haven't come in quite yet. We do also have lines of credit for a variety of businesses. Some use them for seasonality reasons. Others use them just to bridge that gap again between your receivables and your payables. Loans and mortgages, so whether it be a loan for equipment, a mortgage to purchase a building, other things like your Visa cards specific to your business, your operating accounts. There's other things like your merchant services, so a debit or credit machine, also payroll solutions, so making sure that once you do start growing and you do have employees working with you, finding a way to get them paid. Because it's not as easy as just cutting them a check once you get all the tax deductions and whatnot in there. So there is a little more involved there. So there are payroll solutions for that. So one of the most important things that needs to be understood as far as getting a loan through a bank is that banks will lend to you, but they're not investing in your company. So at the end of the day, what the bank wants back is they want their principal and they want their interest back. It's great if your business is growing, but they're not getting, let's say, 10% of your sales at the end of it. So they're not investing in the business on that front. They're lending you the money, so they want to make sure that it's safe and they're going to get their money plus the interest back. Especially for startups, a business plan is very, very important. It shows who your network is, where you've gotten your information, some of those financial projections, what the competitive landscape looks like, and all that sort of stuff. We do also look and see what that capital investment by yourself personally looks like. Basically, we want to make sure that you do stand behind your business and you put your money where your mouth is type thing. When we're looking at financials, we're making sure that those the projections are realistic. A lot of the time people ask for huge sums of money when it's not warranted. So as Thomas mentioned, make sure you're making that number make sense. For a line of credit, usually what we would look at is your line of credit limit would be 10 to 15% of your business revenues for a year. So that's kind of what we use to ballpark that number. Other things we look at, just your net worth, your credit score, your personal guarantee behind it. And then Thomas is going to get specifically into what we look through in an application.
Definitely. So just to back up what Laura's said on basically the realistic side is when we go through these next 3 C's, it's important to understand that as a lender, we're looking at fact-based stuff. So, just because, you think you can gain, in terms of capacity, what we'll be talking about in the next section, really try and base it off a foundation. And that really gives you a lot of strength when you come to a lender. So here for the 3 C's, this is our bread and butter. This is what we look at when we're doing a lot of our lending. It's the capacity, character, and collateral. Really, this is what we do when we're looking at any kind of application, if it's just a short-term kind of prospecting versus writing up a full application. These are the 3 areas where we always try and create our story around and really risk mitigate anything that's coming through. So the first one we can talk about is capacity. So this is really just your cash flow in and out of the business. As a provider at Libro, a lending provider, I like to think that we have a holistic approach and we want to build a good loan on the books, not a bad loan. We want to make sure that you have a room to grow in the future and that there's a foundation there. I would never want to put a bad loan on the books. And what we do to do that is we actually do an in-depth review of your capacity. So what does that cash look like coming in today? What's it look like coming in 6 months from now and a year later? What we do is we understand that bottom line, what's your net income after you've paid shareholders, whatever it may be, dividends. I got to make sure that you can carry your debt load. Whatever you're asking, I got to make sure if it's a line of credit, you can carry your interest. If it's looking for a mortgage, I got to make sure you can handle the principal and interest payments for, 20 to 25 years. So that's really the first thing. And this is what I would typically look at first. If you're telling me you want a loan, I'll just run through the numbers quickly and see that this is here. In terms of entrepreneurship and where you are now and fact-based evidence, tell me what's going on now. Tell me about, what's going to happen in the future, projected out 2 to 3 years. Give me that in your, your business plan, and really highlight that evidence behind it, right? What are the other people doing in the industry? How are you able to achieve this and move forward with that? So I'd say that's the first C that we're really going to look at in terms of risk mitigating paying the loan. The next big one, because Libro is a relationship institution, is character. We always like to build a relationship with whoever we are providing a loan with. And that really means understanding who that person is behind the business. If it's a corporation, they're still shareholders. I want to know everything about them. If it's you as a sole prop, who are you? Because you're really that business. So we do credit history reports. So we'll pull your credit. We'll understand what your history on your own personal side is. We'll look at your credit scores and your experience, right? Experience really talks about how are you going to perform today and move forward in the future. And then also what we do is we get a couple other little documents. We get you to, sign off on a personal net worth statement where you just kind of highlight your assets and liabilities. And we contrast that between your credit report and say, they should be identical. Really, you should tell me that you have a mortgage and you have a credit card with a balance of $5,000 on it. If you don't write it on your personal net worth statement, what are you trying to hide, right? So really, it's all about honesty and integrity and really getting a grip with who that character is. So if the capacity is good, the character is great, we're moving forward with collateral. So in any kind of deal we look at, we like to tie up the loan. And this is the worst case scenario, right? Where we are looking to say, you know, if something bad goes on with the loan, what's going to mitigate the risk of lending? So in terms of that, we can look at collateral in terms of real estate. If it's a commercial mortgage, equipment, we can take an aspect of that equipment. We can also margin a line of credit based off of accounts receivables and inventories. But they're always going to have a different value. So real estate in the personal world, if you guys were to go out and buy your own personal home, you'd have to put 20% down. That's a loan to value of 80% for the lender. That's that buffer that allows us to feel comfortable providing you to the personal home. Commercial is a little bit different. As entrepreneurs, you'll see, you know, if you're going to buy equipment, 65% of the value. Whereas if you're buying a commercial property, 65% as well, right? So there's that different buffer just based on the risk. And this collateral aspect really mitigates all the other sides, right? This is why we feel comfortable moving forward. I don't think I missed anything, Laura, but if you want to add anything, but I feel like this is, you know, it's
good.
Yeah.
It's a lot of information, and we know we're going through it quickly. So yeah, we're sharing these after, as we said. So don't rush to write everything down right now. But just some of the documents that we actually look for when we're putting a loan application together. So as Thomas mentioned, that personal net worth statement is important. It does just show what you have as far as assets yourself, and what you owe. We always look for a positive personal net worth when we are doing loan applications. We do also look at your tax returns, which shows your breakdown of income, as well as a notice of assessment. Those are both documents that you file with the Canada Revenue Agency. The reason we look at both, just the notice of assessment would show if you do have tax arrears to the government. And again, that's something we wouldn't lend to if you do have those arrears in place. The business plan just keeps coming up. Just make sure when you give it to us, it doesn't have dust on it, and it is still pretty current. We don't expect you to sit there every day and update a business plan, because that's super unrealistic, but let's say every 6 months or something, you sit down and you see if it still makes sense. Or before you just hand it over to a financial institution, just give it a quick click through, because things do change quite quickly. Depending on how your corporation or your business is registered. So a corporation, we would look at your articles of incorporation versus a sole proprietor business. Oftentimes you'd have a master business license. So that's just to make sure that we're getting the correct shareholders or the correct people signing the loan documents. And also providing their guarantees. And then depending what it is, so if you are purchasing a piece of equipment, we're going to ask you to see the invoice or the quote from whoever you're buying it from, just to see if that amount makes sense there. You will see through a loan application, we do ask for a lot of supporting documents. Not that we don't trust you, but at the same time, Libro is also audited, as is every other financial institution. So we do need to make sure that we do have those supporting documents in place. As far as some other things, so just briefly going to touch on this just for time's sake. But one of the important ones is the amortization period. So a commercial building, we would amortize over 20 years. But let's say a piece of equipment that's only got, let's say, a 7-year life to it, we're probably only going to amortize over 5 years. So there is a difference over how long your loan would be. We'd be doing you a disservice if we gave you an equipment loan for 25 years and the equipment's going to be dead and in the trash in 5 years. It just doesn't make sense. So basically, your loan is going to match the life cycle or or the usage, I guess, of whatever equipment you're buying there. I'm going to skip ahead here just to some of those ratios. Tom, do you want to just touch on those?
Yeah, definitely. So circling back on the first C there that we had with the capacity, guys, this is what we look at when we're trying to service the loan. So you see that, I'm not going to dive too deep into this, but just so you guys can understand, this is what our main ratio is. It's our debt service ratio. Forgive me if I keep calling it the DSR. And this basically takes in all your income, and we then divide it by what the requested loan amount is. And this gets us a ratio. So for today, you know, we usually typically look at a loan to get a DSR ratio of 1.25 to 1. So meaning that you can pay the loan off, you know, with the 1.25, 25% more than what you actually have in the income and what the request is. So that's really our bread and butter in terms of what we are looking to actually cash flow the business. And then also the second piece is a collateral, the loan to value, right? What are we looking for? What's our buffer and our risk mitigation in terms of giving out the loan. And for commercial property, we're looking at 65%. And pretty much we can say that anything commercial wise, if we're looking at equipment, we'd like to buffer in that 65% loan to value, meaning that you would have to put 35% of that down. And then we just kept this here. I'll keep it really easy and brief. These are other ratios that we look at when we're just kind of going through the application: working capital, debt to equity ratios, and your EBITDA, right? Just to understand those, if you guys can just make some quick notes, those are always good to know for your business, where you're moving one year after another, always trying to see some positive growth there. And that's what we always look at too. Next one, CSFBA is another program provided by the government. They can actually use a proportion of the equipment value at a higher loan to value than a traditional financial institution. So if you guys are always looking to purchase equipment, I'd look at this CSFBA or CSFBP program provided by the government. It's a great way to get some equipment into your business. And then,
so some quick tips. So just make sure that you do have a cushion for cash shortages. If you do know there's a cash shortage coming up, please plan ahead. There's nothing worse than rushing to your bank and being like, oh, I need this money in 2 days, because that's just not realistic and it's not going to happen. So just make sure that you do have some cash reserves left in the business. We don't expect you to be an expert in every single area of the industry, but make sure that you have the right network of people in place and the right advisors that can help you get to the next level. Make sure that you're building a best case and a worst case scenario when you're doing projections and whatnot. And just as far as the worst case scenario, we want to make sure that your business is still able to survive through that. Just with COVID this year, that's brought a completely new curveball to the mix there. That a lot of businesses weren't prepared for or never could have predicted. So that's just an example of that one. And just know your stuff. Anticipate what your obstacles are. Don't make everything a last minute plea. Plan accordingly. Ask questions. There's a lot of people in the industry that are your competitors that would also be happy to chat with you as well. And there's a lot of people out there that are happy to just kind of mentor the new entrepreneurs in the industry and help you share some of the initial findings that they had as a business. There are many other different resources available out there for entrepreneurs. But yeah, so that basically wraps it up. We went through that super quickly. So you got a lot of information there. But as we mentioned, we're gonna be sharing these slides with you after the fact as well as Thomas and I's email if you wanted to reach out. We're happy to chat with you too. But yeah, does anybody have any questions right now that we could help facilitate?
Oh, I just wanted to say hi to Laura because we went to high school together.
Hi, Kelly.
Hey.
I saw you there. How are you?
I'm good. How are you?
Good.
Tell Allison I say hi.
I will. That's funny.
Okay.
I saw you on there. I was like, oh, it's Kelly.
Yeah.
Small world.
It is. It always is.
Just to get a bit of a temperature of the room, how many of you think that you'll potentially be looking for loans or some funding into your business in the next year? Yeah, about a third of you, maybe half. Okay, wonderful. So I know Laura and Thomas said it multiple times, but those business plans are going to be really key, which we have worked on. So don't forget what we did in the beginning part of the program. That will be useful again. We promise. We know it's not the funnest. Most fun. Terrible grammar. We know it's not the most fun part of your business is drafting a business plan.
They're not.
I'll actually add something in there too. If you guys are looking to, get lending down the line, I would encourage you guys to actually reach out to whatever financial institution that you are looking to apply or build that relationship, because building that relationship is so key. So go there, build the account, get them to learn how you operate your business. Because that's the history that, that if you've been there for 6 months and you have great account history, that's going to help you a lot. Sorry to jump in there.
That's really great advice. Thanks, Thomas.
No problem.
We probably have time for one question. You guys really ripped through that. I'm really proud of you. That was quite quick.
Information overload.
So you said that the cohort can get in touch with you. You'll share your emails with us. these two are wonderful human beings. They often make their services available to us so that people can chat with them. And we partner with them on another event, which unfortunately didn't run due to COVID this year. I feel like I've said that a million times during this program, but there's some other events for those of you that are still students and will be students next year. We potentially might have another event where you'll see Laura and Thomas around again, which would be really lovely. Any questions? Aaron, yeah, go ahead.
So I got a question for, if your business isn't currently making revenue at the moment, how do you predict your projected revenue?
Good question.
So I'll take that. So first of all, let's start it from your level. Let's do a top down, right? Let's say, you're looking at, this is what I can make. Try and do it fact-based, saying, this is what, letters of intent are great ways to do that. Just understanding the potential of that market. Talk to other competitors. I know that sounds counterintuitive, that you think, why would competitors give up information? But actually, they can actually give you more than you would ever imagine. But the opposite I'd like you to think about as a bottom-up approach is really, what's the income that you need to succeed? What are your fixed and variable costs? And go from there. And then you will slowly build up. You'll have all your expenses that need to be covered. And then you'll say, okay, now I need to make $50,000 a year to do this. Tell me how that's achievable. Tell me how the market's going to lend you that. What are your platforms, and kind of get there. Obviously, you can say, oh, I'm going to get there just based off, there's 25,000 people that want my product. Well, just try and make that a little bit more palatable for the lender, trying to give me those facts, right? Maybe doing a quick survey. But putting that into the business plan, I think, is just key, right? Just highlight those pieces. Letters of intent, like I already touched on, kind of around that. I think there's maybe just, I don't know, Laura, do you have anything on top of that? I think it's hard. It's a great question, and it's hard, and we do see that all the time. But that's where the difference is, right? I think that's where you just kind of have to open up your business account, kind of run that a little bit, have a little bit of experience, and kind of see, this is what I've done in the first month. This is what I've done in the second month, third month, fourth month. Come to us, and we can see that growth, right? So.
And yeah, it is very, very difficult. As far as like Thomas and I lending, we wouldn't be able to do it through a traditional financial institution. But that's not to say there's not grants available for you out there, or private investors that would be willing to invest in the company. But yeah, it is very tricky just to get that initial financing in place.
Awesome. Thank you so much. That was really helpful.
Wonderful. Well, Thomas, Laura, thank you so much. We really appreciate you being here. I'll look for the email with your presentation, and I'll post your contact information on the network that we have, so that you guys can reach out to these lovely human beings who may or may not be able to help you access some money, which we all need. Laura, Thomas, thank you so much for being here. We will send you off with our customary wave goodbye, and we really appreciate you. Thank you.
Bye, guys. Thank you.
Thanks for being here.
Bye.
Bye, guys.
Bye. All right. So that was Libro. Again, looking for traditional bank loan financing. The vast majority of startups are self-funded, and I think that you all know that. And once you get to the point where your self-funding runs out, this is where accessing traditional lending tends to be an option. We're going to have another traditional lender join us in just a second, and then we're going to try and take a quick break either after this one or after the next one after that. All right, so we're going to have Sarah join us now.